guest on today's special programme. It's our budget special. Is Matthew Hall, partner with Wilkins Kennedy Chartered Accountants. You're watching Business Connections Live, and it is programme number 77. Great to have you with us as always. Now, if you were sitting there in your armchair last week, or maybe you were at the office, or you were just sort of creeping around and you're watching the TV, you would have seen the budget announcements when they came out. It was an interesting budget, was it? Or was it pretty much just what everybody expected? Was it a little bit of housekeeping? Is that what we saw last week? Well, to discuss that with us today, as I said, on this budget special, is Matthew Hall, partner with Wilkins Kennedy Chartered Accountants and business advisors, who's going to be helping us talk through what the actual budget means to you and to your business as well. Will it have a big impact? Are there things that have happened last Wednesday that you should be aware of, or have the things already been happening and it's just really a bit of a catch up? That's what we're going to be talking about. Matthew, lovely to have you with us today.
Thanks very much.
Let's talk a little bit, first of all, before we get onto the budget, let's talk a little bit about Wilkins Kennedy. Who are Wilkins Kennedy and who are you?
And say, who are Wilkins Kennedy and who are? Should I start with Wilkins Kennedy? Why not? And say, we're one of the top 20 firms of accountants in the UK. What does that mean? It basically means in terms of size. So we've got 14 offices in the south of the UK and one in the Falkland Islands as well.
That's handy.
It is, yeah. And so luckily they have a different tax regime there, so I don't actually touch the Falkland Islands too much. But we act for a vast amount of growing business, owner-managed businesses, subsidiaries of overseas companies, right the way down from your small retail up to large business. So that's Wilkins Kennedy.
Do you think the role of the accountant in business has changed? In the old days, it was very much a case of you would go to your accountant, you would sit down with them, you would do the books, you would sort things out. It'd be nearly a once a year visit, and then you'd walk away, and the next time you'd receive a bill, and then you would see your accountant the following year. Do you think things have changed?
I think they have for people that use their accountants properly, yeah. I mean, there's no two ways about it. There are still some people that use their accountant for the once a year, this is the compliance we must do. But for a lot of business working more strategic, looking at their tax structuring and things like that, and for those clients, I'll be with them on a very regular basis. What also has helped is that, as hopefully a lot of our competitors have done the same as well, moved away from this sort of concept of as soon as the phone goes, the clock starts ticking, because I think that really has, or that didn't help people wanting to take professional advice. So they were worried about what the cost was before they got the advice.
So do you see yourselves then, your role to be more business advisor? I mean, it says that in the introduction, but are you now more business advisor than it's just about the numbers?
I think very much so. I mean, the numbers are still there. Everyone's still got their compliance obligations, but to be honest with you, that's the sort of the low value work. People have to do that. People don't want to, but where accountants can make a difference, yeah, it's on the advisory side. So for instance, when we finish here, I'm off to see a client. We're looking about, as well as what the budget meant for them, we're also looking at their plans for the next year. We're looking at their forecasting, their spending patterns, and how best to structure those to get the best tax relief. And that's where we can add more value. Yes, we'll do their accounts at the end of the year as well, and their audit, but that's not the bit that excites them. It
has changed, hasn't it? Because go back 5 years, maybe 10 years, the way it was all nearly retrospective, wasn't it? You could go to your accountant, you could sit down, and the magic would happen for last year then. But now it seems it's all about looking forward, isn't it? It seems to be, you've really got to be on top of your numbers these days.
Yeah, I think very much so. I suppose technically you really should have always have been. But I think probably what's focused attention is availability of finance and the fact that people are actually, or businesses of all sizes, in particular small businesses, very much more conscious of cash flow and the likes. And when a lot of businesses are operating on reduced margins, lower margins than they would have been years ago, then that is key.
What about the whole, when your customers come into you, what is the, I hesitate using the key thing that they get wrong, but what's the most common errors that they make? I mean, everybody is trying to get it right. When they come into you, what are the problems that you see from most small businesses?
That's a tricky one. It's a fun one. Let's have a think. I think it can go across a piece, but I think possibly the DIY trying to do everything self at low cost can be an issue.
It can actually cost you more money.
Yeah, it can, because I mean, obviously, what happens is for mistakes with tax returns, be it VAT returns, be it pay as you earn, be it the annual tax return, the revenue now are very much into penalties for careless behaviour and things like that, and you can end up with penalties quite easily for what are quite simple mistakes. Now, what one hopes that in the review of penalties that's going to change, but unfortunately, the direction of traffic has been that where you had to be negligent to be charged a penalty previously, it's now about whether you're showing careless behaviour or not, and so I'd say that's probably one of the areas where businesses do make mistakes. In not seeking advice soon enough.
Now, there's been a lot in the news about avoidance and evasion, and evasion I've always understood was the illegal one.
Yep. Mm-hmm.
And avoidance was actually using the rules, the laws of the land, to be intelligent about the way that you fill out your tax form. It seems to now that we've got, instead of it being black and white, there now seems to be this grey area where evasion is nearly being considered, particularly in the media, as being wrong. And yet, if the rules are there, surely if you follow the rules, you cannot be getting it wrong. But we're starting to hear the spirit of the law. I mean, what's your feeling on that? Is there, across the accountancy world, is there a general consensus of opinion that says, actually, we agree with this, we disagree with this? If you do it by the rules, you must be doing it right?
Right, okay, that's interesting. Just as you were setting up, I was sort of thinking 50 Shades of Tax Avoidance. But,
yes, Steady.
But,
you get us all excited now.
And so it's the only way accountants and tax can get excited. No, I mean, let's see. You're absolutely right. Evasion evasion's wrong. That's illegal. If you're wrong. I mean, when I started, one understood evasion illegal, avoidance fine. That's legal. Where are we? What actually happened was this market started with what are now being termed as aggressive avoidance schemes, and that's been a market which has been around for a long time. But it's probably fair to say that late 90s, early 2000s, and indeed right up to maybe 4 or 5 years ago, it was a market that was growing and growing, and more people were being drawn into this. So technically, the avoidance schemes were legal. We've obviously, there have been various high-profile people who have been named as taking part in these schemes. But the way in which those schemes are sort of set up is that you've got a small number of advisors who are looking for the loopholes in the legislation, not starting with their client, just thinking about, right, let's try and find a loophole. Let's try and loophole that we can exploit, and then sell this to as many people as we can, is broadly how the market sort of started. So you ended up with this whole sort of commission-based market. So how do they get it out to as many people as possible? Well, perhaps using smaller firms and accountants to promote it to their clients in exchange for taking a commission. Now, I'm pleased to say that's a market that we as a firm have always stayed away from. We believe that tax planning and tax mitigation should start with the client. You look at the client, you look at their situation. There's an awful lot of tax to be saved without having to revert to the avoidance schemes. Why? Well, because they're very short-termist. The revenue we're always going to challenge them. And when clients of mine because naturally clients are going to be approached by advisors with these schemes. They come to me, what do I think? Well, the first thing I'd say is that the first thing you're guaranteed, whether the scheme works or not, you're going to be in for an uncomfortable ride for a number of years, because the revenue are going to make life difficult for you, because they will inquire into the scheme, and you'll be going for a long period of time not knowing whether you've got a crystallised liability or not. But
surely if the rules are there and you are following to the letter, maybe not the spirit, but to the letter, then it must be legal to actually go down that route.
Yeah, it's legal, and this is where it does come to the sort
This is the areas of the 50 Shades of Grey, isn't it?
It is. I mean, cause if you look at, you take an example, indeed, one of the, and so we're going to talk about the budget a bit later, but one of the things that they brought in, both in the autumn statement and in the budget, was just sort of clipping at the wings of entrepreneurs relief, so people getting 10% tax rate for selling their business. And there are certain structures which I had, or certain businesses which wouldn't quite meet the criteria, but you had to do a little bit of planning to get them into that. Now to my mind, that was fine. Take at the other end, where you take one of the avoidance schemes that a famous comedian perhaps was set up for, was set into. That was taking all of his income, pushing that into an offshore jurisdiction, and he was taking loans back from that, arguably within the
letter of the law.
Arguably within the letter of the law.
Arguably, yes.
because well, that one is arguable, and these things that they also take a long period of time as well to go through. So it's but it's horses for courses as well, because so long as we're not talking about evasion, so long as we are talking about legal avoidance, whether it's the aggressive avoidance schemes or whether it's tax mitigation, people have a different risk profile, and if people have got a high risk profile and are happy that, okay, for 10 years or however long it takes for this to get through as high a course as the revenue you're going to challenge it to, I'm happy that I may or may not have saved this significant amount of money, but I think that the risk of that is fine. So it really is horses for courses.
Does that put the likes of yourself, accountants, large accountancy companies, does that put you in a difficult position sometimes with your clients?
I don't know about difficult so much, other than sort of meeting expectations and having the right clients as well. And that's probably the wrong way of putting it, is having the right clients. And we do have clients with higher risk profile. And as I say, we've never been promoters of these schemes. It's not to say that I don't know what schemes are around to ensure, because we wouldn't be doing our job if we didn't know what was around. And if our clients go into these, then they'll take the advice from the scheme promoter. They might say to us, "Do you think we should be in this or not?" And we'd look at the scheme on its merits and give them an honest view of that. Now, if the honest view is no, but the client says, "But actually, I want to take this punt," that's fine. If we thought the scheme didn't work. So if we really thought that the scheme didn't work and therefore they'd be putting in correct return by going into the scheme, that's where we've got a difficult position, and we'd actually have to take a view.
I mean, it's really interesting, and the whole area. I know that isn't why you came in today, but I think a lot of people find that a little bit confusing. They find it intriguing. I think some people have been criminalised on screen by the media. I mean, we go back and we look at Jimmy Carr, who was taken to the cleaners about it, and yet he actually was doing nothing wrong.
Yeah, that's right. Jimmy Carr and the singer Gary Barlow, was it?
Hello, I'm Gary Barlow.
Exactly. I mean, that's right. They've done, they've done nothing wrong. They've taken a choice, or perhaps they've been advised in a certain direction, which is fine. I think it sounds as though I'm sort of saying, this is all bad or terrible. What I'm actually more concerned about is the fact that as the waters get muddied, what I call the sensible planning, starting with the client, that starts to get eroded, because suddenly there's momentum shifting against this whole unacceptable tax avoidance. And where does that stop? Does that stop at these artificial avoidance schemes, or does it stop at an owner-manager taking dividends out of his company rather than salary, because dividends is a lot more tax efficient?
And that is the issue, isn't it? It is the issue that there are ways. I mean, there are a lot of people out there. What everybody wants to do, they've been realistic about this and truthful, they want to realise the maximum return from their salaries. And it doesn't matter what anybody says. Do people honestly feel that they have a social conscience, that they should truly give the maximum amount that they possibly can to the inland revenue for the good of us all? And yet most people that are in the position where they are saying, you're not paying enough tax, if they were in a similar position, would be trying to reduce their bill as well, wouldn't they?
Yeah,
maybe.
that's right. I haven't met anyone that wants to pay the maximum amount yet.
Yes.
But I've met the odd few actually who we've actually put tax planning to them, which would reduce their bill. I've looked at it and said, and despite the fact that it's not in the aggressor, it's actually said, well, actually, I'm earning a good wage here. I don't mind paying that tax on that sum.
And I take it that if you are working hand in hand with the revenue are fair. They're put into a position sometimes where they have to proceed. I mean, let's face it, they've got a job to do, haven't they?
The revenue have got a job to do. There's no two ways about that. The revenue being fair. In any large organisation, you're going to have employees that fully understand their role, and employees perhaps who aren't as strong.
But they're under pressure at the moment, aren't they? They've had cutbacks. They've had a reduction in staff. I mean, they are under pressure, aren't they?
Yeah, they are. Response times are slow. They've got heavy workloads, but everyone's busy. But no, in terms of the revenue, I think the thing that we need to get is more consistency from the revenue. The specialist teams at the revenue are actually quite good and quite consistent. So those that deal with research and development, share schemes and the like, valuations, pretty good. It's when you get onto the more general side that, and if individuals and small businesses didn't direct with the revenue, they could be getting the wrong advice just because they happen to get the wrong person on the end of the phone at the revenue. And we've seen that, seen examples of that in the last week alone.
Right, okay. That wasn't what you came to talk about, but absolutely fascinating. I'm sure you'll agree. We've read so much in the press over the last couple of weeks. If you're wondering who we're talking to, it's Matthew Hall. He's a partner with Wilkins Kennedy. They've got a whole range of different brochures that are available. We will give you their website a little bit later on. Everything from the likes of tax rates. We'll just have a quick look at the brochures that they've got. Tax rates, got their budget report. Everything is all there. I mean, here's a company that can actually give you the kind of professional advice that you need to make absolutely certain that you get the maximum return from your salary, from what you're paying out. Maybe you're a business owner, maybe you're a partner in a business and you just want that key advice. That's what they're all about. We are going to be talking about the budget. Do you feel it was good for you? Do you feel it was bad? Are you a little bit nonplussed about the whole thing? Would you like a little bit more information about the way the budget actually was? We'll be talking about that in just a few moments' time. Hope you found that first bit really interesting. I did. Is it legal? Is it illegal? Where does those 50 shades of tax efficiency come into play? On last week's show, our guest was Warren Knight. He's a social media speaker and SME growth coach, author of Think Digital, a first step-by-step guide designed for creative entrepreneurs. He said a lot of really very wise words indeed. Really enjoyed the show. When we finished it, I said to Warren how much I'd enjoyed the programme. It gave an opportunity just for you to step back for a moment and just look at your strategic path through your business plan, the way you're running your business, the way you're making your business work on the day-by-day basis. Some great advice. If you haven't watched the entire programme, maybe here's a little bit of a tease to tell you why you should be. This is Warren Knight from last week's edition of Business Connections Live. My guest today is Warren Knight, a social media speaker and SME growth coach and author of Think at Digital First, or hashtag Digital First, a step-by-step guide designed for creative entrepreneurs.
I think because entrepreneurialism has been in my blood from a very young age, and going through the fun of growing, the pain of growth, and the pain of losing a business and then finding another niche and growing that again, I've definitely earned my stripes over the years. You are the most important, cog in that engine that's turning, and if you're not strong, if your belief system isn't congruent from the ground up, and everything that you're saying, doing, talking about, and coming from that place of honesty that we touched on earlier, it's just not going to happen for you. You can be an amazing people person who is very passionate about what they do. People believe in you because of the belief that you have around what you're doing. To me, it's about building a business with strong foundations and making sure that those foundations, everything's been thought about, whether it's about you running the business as a solopreneur, if you like, but understanding who do you need to bring around you to help you with that business moving forward. When I work with business owners, they've got to want to have that vision. They've got to want to know where they're going, how they're going to get there, and what it looks like. But what they don't always have are the stepping stones to get to that place. I think the biggest pain, if you like, is that loss of direction. So I love working with companies that are maybe about 3 years old, got themselves to a certain turnover, have a nice presence in the market at the moment, but really want to take the business from one level to another level. So understanding what your unique selling proposition is all about you as an individual, you know, what your team looks like, and really, when I talk about that helicopter view of the market, is analysing that market at each stages of your growth. Google is, you know, a massive search engine, and Google can be the make or break of a business. You can really start thinking about the type of content that you push out online that matches not only what that person wants to read, but the way that person is searching. Are you a busy fool? Because how much time are you actually focusing working on the business rather than working in the business? When you have virtual assistants, as long as you are very time-driven, brief-driven, action-orientated driven, then that helps that individual to get that work done and move on. But when it comes to business, you've got to stay focused on that task, get it finished, and then move on. The focus of the keywords. When you have the focus of the keywords about your business, then you can take those keywords and apply them to every single piece of content that you push out online. You've got to have a database, you've got to have a CRM, you know, you've got to have information on a regular basis about your customers, and that's really key. For me, one of the best tools that I use on a daily basis is Hootsuite. Great tool, it reaches so many platforms and push that content out there. But I think the third one, which is really important that companies forget on a regular basis, is the analytics, is analyze that traffic that's coming through to your business. If you have a great website and 67% of that traffic's coming from the States and your target audience is the UK, what's that telling you about the content that you're pushing out? Hi, I'm Warren Knight. I am the author of Think Digital First, and I'm an SME growth coach. I think the three key things for me to be able to help you is actually the first one being you. Focus on you, own your time. It's okay to say no. If a meeting's not going to get you to the point that's going to help you grow your business, it's okay to say no and stay focused on the things that are the intelligent things that are going to drive the business forward. The second thing for me is really know technology, because the technology process can help you save time, it can help you grow your audience and your database, and get it to be focused on sales and marketing. So use the tools that are out there that are going to help you market the business, i.e. promote it, like Hootsuite, and actually then use the tools that are going to help you through that sales process, i.e. MailChimp, for instance, or some of the other ones that we've spoken about today. They're going to take people through the sales process, so the customer acquisition journey. And the third thing is just do it. Get up and do it. Don't worry about being perfect. Just get out there and do it and learn from your mistakes. So I'm Warren Knight. Thank you very much.
That was Warren Knight from last week's programme, a great show. Social media speaker, SME coach, and author of Think Digital First, a step-by-step guide designed to get the most from your business and targeted at creative entrepreneurs and solopreneurs. While we're talking about entrepreneurs and solopreneurs, don't forget we've got the Excel, the great British business show taking place next month. We're going to be there. We're looking forward, not next month, the month after, January, February, March, April, in May. We're going to be there in May. We're looking forward to it. We're going to be broadcasting for the 2 days. If you are going along, please do come along and say hello to us. If you can't make it to the show, well, then all you've got to do is go to the Business Connections Live website and you can watch the proceedings from there. We'll be talking to some of the keynote speakers who will be turning up at the event. We'll also be talking to some of the stand owners and just trying to get the general buzz about what's happening in industry at the moment. That's the great business show taking place at Excel in May. My guest today is Matthew Hall. He's a partner with Wilkins Kennedy, Chartered Accountants and Business Advisors. He's helping us a little bit with the financial maze of the recent budget announcements. We've just been talking about some really interesting stuff, whether things are legal or illegal if you are just joining us. So do go back to the beginning and find out more about this particular show. And hello to all our friends at the Inland Revenue as well. We'll get, if somebody from the Revenue is watching this, maybe at a later date, please get in contact with us here at businessconnectionslive.com. We would love to have you on the programme. We'd love to sit you down. Maybe somebody can sort of talk at it from another perspective, from the other side of the fence. I think there shouldn't be a case of us and them. We're all in this, I suppose, together to a certain extent. And, rules are written. We follow the rules, and people have got to bring the rules in and to actually police them. So, get in touch with us. We'd love to have you on the show. Make a really nice sort of a difference. Matthew, back to you. Let's talk about this budget.
Yeah.
It's very difficult for it not to become political. And in fact, it is used as a political ping pong ball anyway, isn't it? When they stand up there, particularly with an election just around the corner. Was it a budget of big announcements, or was it very much a case of stand easy and carry on as you were? What kind of budget was it in your mind's eye?
I think stand easy and carry on as you were is a pretty good way of summing it up. And there's no question about the fact that with an election around the corner, it was always going to affect the budget. So in terms of announcements that we had on Wednesday, reasonably few, to be honest with you. Of course, we've got lots of things coming in which had been previously announced. He did not give away too much to people. I guess pre-election budgets have got one or two things they can do. Either look to try and give away as much as possible to try and buy some votes. I think that people are probably a bit more sensible than to get suckered in with that type of tactic now. Or, as you say, sort of steady as you go. I don't want to upset too many people.
And it really is. It's a fine line, isn't it? And I think what's interesting is, depending on where you stand with your political views, nearly depending what paper you read, you're going to have a different interpretation of what the budget has achieved. How can we stand back and be vanilla when we look at it then, and actually see it for what it was?
And say, in terms of stand back being vanilla, obviously the Chancellor stood up and told us that the economy's going great guns, employment is up, growth. I think one of the fastest growing major economies, and so I think we've got a bit of a ditty there, just comparing the growth in the UK to other major economies. So that was sort of excellent news, and he did major on that. He also mentioned that the deficit target, so the idea of bringing deficit down as a percentage of income, that is going in the right direction. So we had an excellent.
But if you listen to the opposition who are in there at the moment, of course what they're saying that it's not as good as we think it is. It's still, he did promise to get rid of it in this particular this particular parliament. And of course he hasn't achieved that at all, has he?
Yeah, well, that's it. I mean, again, I've just shown there that if you look at his 2010 announcement, I think he was suggesting that they wanted the deficit by 14-15 to be at 37 billion. It was actually at 90.2 billion. So he didn't mention that.
But it's only a bit out, isn't it? Only a couple of billion.
And so it is, and we had another 2 hours. We go through all the reasons why that may or may not be. But I suppose it's just sort of putting balance to the things that he told us. But broadly speaking, people can see and recognise where we are in terms of an economy, and it's a reasonably strong position. The other thing that he didn't mention was output. I noticed that a lot of the commentators pre-budget were talking about output and efficiencies and productivity, and that and the UK has not been as perhaps as productive and created as much output as you would like for all of this new employment. And there's just a bit of an example there as to where we are. So, you know, we've made some good strides, but it's very much balanced.
The thing is that when you do look at the other major economies that are out there, you know, you look at America and particularly look at Australia, 70% growth there, and we're down at the 3, aren't we?
And so in productivity, that's right. And as I say, that's, you know, it's another area to look at. It's one that wasn't particularly.
But do these kind of figures, do they actually affect? Do they really affect Joe Public? Do they affect small businesses? I mean, even though that they are the top line figures, do they matter to me?
And so, well, that's the thing that I was looking at more. Is let's get back to actually what the budget did mean to business, and those figures. Yes, they will matter at some point, but it'll be, you know, on a sort of cascade effect that, you know, the economy's going great, then there's more activities for everyone to enjoy. But what people are always looking at, what my clients are always looking at in a budget, is what announcements are going to be made. Yes, we'll have them tell us how great the economy is, and the opposition will tell us that it's not so great. But what measures are we going to have that are actually going to affect my business and help my business over the coming year? And that you're looking at in terms of investment, employment, tax rates. You know, generally businesses don't want to pay so much tax. Reduce tax rates and reinvest in business. That's what my clients are generally looking at.
So what came out of the budget then in those particular areas?
Well, and again, in terms of what measures were brought in the budget, reasonably little. For business, we did know though that corporation tax was being consolidated at a flat rate of 20%, which is a pretty good rate really, and so that kicks in from the 1st of April this year. So we've got a flat rate of corporation tax, 20%. Which is very low by comparison to a lot of other major economies. Yes, it was an announcement that was already trailed, so I can't say that great news as of last Wednesday got this. But of course it does mean that businesses making profits, there is more left to reinvest. Investment is actually is a key one. And investing in fixed assets, I think, is something which which has always been dear. And one of the things that he missed the opportunity to do, in my opinion, was to give some certainty on capital allowances for investment in plant and equipment. And at the moment, businesses can invest up to £500,000 plant equipment and can get tax relief on that. On the 1st of January, that's due to go down to £25,000.
Which is a horrendous amount for it to drop by. I mean, there must have been people going gulp when that happened.
Yeah, I mean, the truth is, it was actually put up from 25,000. So we had a short period of time where the limit was 25,000. This annual investment allowance, it came in, I think, since 2008, we've had 5 or 6 changes to the rates.
For people that don't understand what the annual investment allowance is all about, how do you use it? What can it be used for in business? Yeah,
okay, so this is businesses really investing in capital equipment, so plant, machinery. So for, take an example, a haulage business, it could be their trucks, any other type of business, your desks, anything which is a capital item of expenditure, which plant or machinery, fixtures, fittings, would look at potentially qualifying for this. So. And it gives you tax relief on the full cost. Mm-hmm. Otherwise, you have to wait over a number of years to get your tax relief. Now, the issue that I've got on here is it is a large drop that's coming. Yes, okay, it was a temporary rise, but you've got businesses that don't know where they're going to be for the next year or so. Sorry, beg your pardon. For the next year, anybody with, let's say, an accounting year that runs to June, they know that up until the end of this year, so from the 1st of July to the 31st of December, annual investment allowance is 500,000. Beyond that, they don't know where it's going to be. He said it won't go down as far as 25,000, but we don't know what that'll be. So that will affect their planning. I talked earlier about the fact that I'm off to see a client about business planning.
Yep.
That is an issue which really does affect this client. And
so does it mean that there are going to be people that are going to be erring on the side of perhaps maybe trying to get the capital allowance as it's standing at the moment and getting it in early, and then coming in for a nasty surprise afterwards?
Yeah, I mean that can be one that can be one issue which is going to happen. And another is that that, as I say, if you take that example that I gave of a business which at the moment can invest 500,000, they're a junior and they know they can do 250,000. For the next 6 months of that year, it could be as low as 12,500. Now, if they knew where that level was going, they could actually that actually gets it gets prorated over the period. I'm getting quite technical here, aren't I? So let's yeah. But the key issue is that, and it will affect this business, you can see, and a few others, that they will actually look at putting the brakes on some investment until they actually know where they're
And I think the thing about £25,000 in the scale of things, it isn't very much money.
It's not
for a capital investment. I mean, if you're looking at £500,000, then you know that nearly encompasses most small businesses. But a small business to invest £25,000 into equipment or capital is barely anything. I mean, in fact, there is one piece of kit in this particular building, which that is it. That is it's a single piece of kit, and all of a sudden you start thinking to yourself, crikey, that is the whole allowance gone in one go.
Yeah, that's it. So that, I mean, as I say, rather than say, it's just a point which I felt that he copped out a little bit, and he said that he'll look at it in his autumn statement. So
if he's still there, of course.
Indeed.
Mr. Balls or some other unnamed politician. All right then. So where do we go to next then?
I think, again, it's probably worth, and when I sort of talk about the budget, 'cause we'll always do, after each budget, we'll get releases out to our clients, either by email or put seminars on and to go over what the budget meant. But we'll also look at actually what planning opportunities are still left there, and what tax reliefs are left there. And one of the major tax reliefs at the moment is research and development. You get an uplift on your expenditure. For small and medium-sized businesses, for every £1 you spend, you get tax relief on £2.30. So it's a huge relief, and it's one which a lot of businesses actually can qualify for, but perhaps don't realise that they can.
Now, are we going down the 50 Shades again here? I mean, is this what is defined? What is R&D then?
Okay, I mean...
Oh, yes. Going out and getting the sandwiches. Research and development into your nutrition values, I mean, is this what's going to happen? Are people going to come up with some wonderful schemes here for that tax rate?
Right, okay. I mean, I think it's probably sensible we don't go too far into this, because then I will end up getting really technical. But broadly speaking, it's an advanced knowledge capability in science or technology. And a lot of people, when they hear R&D, they think, oh, you got to have men in white coats. That's it. Only applies. You got men in white coats in a lab, then you can get research and development tax relief. That's not necessarily the case. When I think about, I actually think of a firm of solicitors that were able to claim R&D tax relief on processes that they're putting in place internally. Another business who dealt with fuel testing equipment. Now that sounds techie, but it's actually it wasn't too technical. But let's say R&D it's a large relief which a lot of people I think are missing out on.
So is this a conversation you should be having with your accountant to see if there is something that qualifies for that within your existing business, perhaps?
Yeah, it is, and hopefully accountants already had that conversation, but don't be afraid to ask. And I think it's one I mentioned earlier when we were talking about the revenue, that excuse me, that they've got some pretty decent teams there, and their research and development team is pretty good, and they are encouraging people to use that relief.
Right, so a big tick on that one then. So
Yeah,
well done,
well
done the revenue.
There we go.
Something nice about the revenue.
I was going to say on the basis people hear me speaking, so whenever I'm running them down, so a bit of balance.
There'll be a phone call to you at the end of it. There will be him, not us, him. Okay, so all right. So where do we move to next then?
I think actually in terms of next. An enterprise investment scheme and seed enterprise investment scheme.
Now these are letters that I don't understand. When this came up, I went to your presentation the other day. SEIS, EIS, and VCT. I'm sure there's a lot of people understand exactly what that means. But what are they abbreviations for?
Yeah, I mean this is an excellent route for getting funding into business. So it's tax relief for investors who are investing into trading businesses, generally smaller trading businesses, because there are limits in terms of the number of assets, number of employees for companies to qualify. But if you as an investor looking at investing into a company which is a qualifying enterprise investment scheme, EIS company, you can get a 30% income tax relief on that. The shares, so long as you hold them for at least 3 years, and they produce a capital gain when you sell, that will be capital gains tax exempt. And also, if you've had any other gains, capital gains that you've paid capital gains tax on, you can defer those capital gains. So it's a really powerful relief.
So who has this been targeted at then? Has this been targeted at the big corporate investors, or has it been targeted at individuals who want to see a better return on their money, or at least a way to develop and grow their money?
It's individuals, right? It's your business angels. It's your investors that understand business, that have got money, making not a lot of return at the moment, and obviously can potentially get a good return, but the nature of small business, very risky. So it's one that one.
So it's making that investment a little bit more attractive then to those investors.
Yeah, that's right. And EIS, it's been around for a while. CDIS, I won't get into detail, is one that is just better tax relief for smaller businesses. So the income tax relief is bigger, but the amount you can invest is not so high. The reason why I threw it made a couple of minor changes to EIS relief, which won't affect too many. What I was really hoping to see, because the income tax relief, you can't get that income tax relief if you're connected to the business. So if you own 30% or more of the business, then you can't qualify for this income tax relief.
That's interesting. So it means that what he's looking at it as truly an investment into the business, but not as buying the business or taking it over or running it. That's
right. Which and this, as I say, it's been around for a number of years and has been extended a lot over the years in terms of the amount you can earn. What I think would be quite neat and would actually be to say, well, fine, for the income tax relief, even if you're connected, you can get the relief. But perhaps so long as the business employs at least 15 people. Because you've then got the encouragement for more investment going into business. The individuals get the tax relief, fine, but these are businesses that are employing people. So you never know, maybe one for the next Parliament, whoever's in.
Ever thought of standing yourself?
No. No.
But that really could grow business, isn't it? And for small SMEs or slightly larger companies or startups, that really is very attractive, isn't it?
It is. That's right. And I think and sort of that moves really nicely into other funding. Of course, one of the markets which really has grown is peer-to-peer lending. And it's really fair to say that it doesn't have a tax regime of its own, understandably so. Most industries don't. But in the autumn statement, so actually, let me sort of roll back a little bit. As a peer-to-peer lender, so if I as an individual am lending, yes, I'll pay tax on the interest that I receive, and when the loan gets repaid to me, no tax on the loan because it's just money that I've lent in. That's fine. But what if the loan goes bad? Because again, these the peer-to-peer lending, a lot of them are going to be risky ventures.
Some of it works, some of it doesn't. You're taking a punt again, aren't you?
Exactly. So as an investor now, okay, fine, I've received interest, I pay tax on that interest, but the loan's now gone bad. What have I got? Have I got tax relief for my loan? Well, previously, I've got a capital loss, which I can use against future capital gains, which might not be worth too much to me. But in the autumn statement, it was announced that actually on peer-to-peer lending, where debts do go bad and you end up with a capital loss, you'll be able to set that against your other peer-to-peer income, so your interest received on peer-to-peer loans, which I thought was a good move.
Which once again makes it more attractive to be involved with peer-to-peer lending.
That's right.
It does seem there are a lot of companies out there that are now really growing, aren't they, with this peer-to-peer funding that we're talking about now.
Yeah, that's it. So that's, again, so there's good news in there as well. And I think
for a business, if a business was coming in to talk to you, would you say that is a good route to go for funding?
Peer-to-peer.
Or is the traditional funder, the one we were talking about previously, is that the better way? Which from when you want the funding, which is the best way or the best one to approach?
I'm going to give you a typical accountant's cop-out answer now.
Go on then.
It depends. And it's fair to say. I mean, obviously, I'm a tax specialist. In terms of raising funds, what's the best route for an individual? My corporate finance colleagues would actually sit with each business there and actually go through and say,
look at the profile of the business and also the profile of the lender, I would imagine as well.
Yeah, that's it. And of course, and I mean, if you look at it as most basic, peer-to-peer, it's lending. So you're getting short-term cash, you're paying an interest rate on it. EIS and CDIS
is investment.
That's it. You're giving away some of your equity. So you're into Dragon's Den mode.
But they're not all Peter Jones, though, are they?
Not quite. I was going to say sadly not.
All right, so that's interesting. So peer-to-peer lending. There's a little note on that one that actually said something about a technical note due soon. What's that all about then?
Oh yeah, that's just owners say, as is the case with all of these. And I should say that anything we've been or pretty much everything we're talking about the budget, we're waiting for the finance bill, which comes out on the 24th. What's that? Wednesday? Tomorrow, in fact. Tomorrow. Tuesday. And then the peer-to-peer lending, we're just waiting for a technical note, 'cause that's something which will effectively be coming in April 16. So we've got snippets of the details, but we haven't got the full information, as is always the case with these things.
Now, where are we going to go next before we press the button? Where are we going to go next?
Where should we go? I mean, I thought it was probably worth talking about, and I've talked about funding, I've talked about business. Of course, we've heard the death of the annual tax return is coming up.
And we'll talk about that in just a moment. The death of the annual tax return. Long live the annual tax return. OK, I'll tell you what we'll do. We'll come back. We'll talk about that in just a moment. Before we do that, as we are talking about business, some stage in our lives, we've got to start that business. We've got to get an understanding for a business. We've got to sort of grow and mature. We've got to understand what the different roles in business are. Now, where do you learn that? The trouble is that when you're at school, when you're at university, you just don't really seem to get the insight into how to run a business. Well, that was until Young Enterprise came along. Now, we're very heavily involved with Young Enterprise, and we're involved with the Surrey area of Young Enterprise and then the Southeast. We do a lot of work with them. We go along and they do things like adverts, where they advertise the products that they set up. If you're not familiar with Young Enterprise, what it is, within a college or within a school, they will set up a business. It will have a proper product. It could be anything from a t-shirt all the way through to something that they've thought up themselves. They will then have to run it as a business for 12 months, for a year. Young Enterprise is just a great way of getting young adults on the road to business, and that's what Young Enterprise is all about. We went along to the regional final for Surrey last Thursday night, I think it was. And just to give you a bit of an insight to some of the things that go on there, you get an opportunity to see some of the people that were there, some of the products, and also to find out a little bit more about Young Enterprise. It was a great evening, actually, and well done to everybody that was involved. I think the nice thing about it is you walk around and you talk to these wonderfully inspired, engaged young people, and they say to you, do you know what, I'm looking for a career. Didn't realise that position actually existed in business. And that's what I want to do now as a career. It is just inspiring to go along. Young Enterprise, you want to find out more, you'll find Young Enterprise. In fact, regardless of where you're watching this in the UK, no matter where you are in the UK, there's going to be a Young Enterprise board somewhere near you. Just go onto the internet and look out and check out Young Enterprise. Straightforward, easy, but very, very inspiring. These kids are really getting it. They are the future of tomorrow. The one thing that was fascinating, they all talked about social media, how they'd set up websites on social media, how they were using Twitter to market and promote their products, how they were using Facebook, how they're using Instagram, all the different social media platforms. And the thing that's interesting about that, and this is one of the things that our social media experts have said, social media is great for raising awareness, for marketing your product, but you do need, at the bottom of that funnel, you need somewhere to take the order. And I did ask at that particular event, this room full of people, has anybody ever bought from social media? And the answer was no, they hadn't. They were all aware of it, they were all looking at it, they all knew where to go and to find out information from it, but it doesn't make anybody buy anything. And of course, that's what all our social media experts say. You're bringing the horse to water using social media, but you need a sales site to actually make the horse drink. You need to close that sale, that call to action. And so social media is used for one thing, but you need that call to action from maybe a website or a customer facing team to actually make that close of sale. But it was a fascinating night. Do check it out, Young Enterprise. Okay, it's back to my guest today. It's Matthew Hall. He is a partner with Wilkins Kennedy, Chartered Accountants and Business Advisors. He is a tax expert, the sort of guy you want on your side. The end of the tax return, that's actually not true, is it? I mean, it's the paper tax return. It's what the accountants have been doing for a long time. You've been doing the electronic filing. It's all changed now. It's all electronic, isn't it? Or is it a case of that we're doing it's piecemeal through the year now?
Yeah, it's. I mean, the measures that he's looking at bringing in, it's a bit more than just the online return. But I was looking through the document. It's a reasonably skeleton document at the moment, but it's looking at an online tax account. So the idea is that it's going to be automatically populated with details of your other income from other sources, that you can make payments on account. One of my colleagues was talking on this, saying she doesn't quite know why people would want to pay their tax early, but
better in my bank than in theirs.
That's right, but there may be reasons. So it's the idea. Well, what I was actually more interested in, I was looking towards the end of the document, because this is something which is going to be rolled out over a period of time, over the next Parliament, in fact. And they're looking towards the end of it, having this online tax account linking in with your business accounting software. Now,
when you said this, because it looks like they're going to have access to bank accounts as well, so they can populate it for you. There seems to be an element of semi-automation there.
Yeah, I mean, like I say, would want to have a look at the detail on that. I mean, but certainly access for other records that they've got within the revenue system, so from P11Ds, P60s, the likes. Yes, and it goes a step forward because, of course, banks and lenders do, or other borrowers do report to the revenue what interest has been paid out. So it's almost revenue looking at saying, actually, we've got all this information. Let's try and put it together and use it more usefully. Again, somebody has commented on the fact that the Revenue's IT projects haven't always gone to plan.
No, they haven't, have they?
So it'd be interesting to see on timing. And like I say, I think on that probably the interesting bit was would clients want to, or would businesses want to link their business accounting software up to this revenue online account?
Let me just look down the camera. Would you? Really, would you? Meanwhile,
Yeah, I did. I mean, I talked earlier about penalty. And I was thinking through this because I was talking about penalties earlier. Of course, now you do anything wrong in your tax return, incorrect tax return, immediately looking for penalties. Well, what about if then you made a mistake in your internal accounting system that would link to this online tax? Now, I'm not. It sounds like I'm scaremongering, but I'm not. And there's a lot of details to come, and that's by 2020. But no, interesting development. But perhaps, perhaps one for the future. And say, in terms, I think with the annual tax return, definitely annual tax return, didn't really have too much more to say on that, other than it's happening, and we'll see how their IT survives through that.
national insurance. Always a good place to be, national insurance. So tell us about what's happening with that.
Yeah, that's it. I was saying here on the sort of business bit, so there are a couple of measures which relate to individuals that I do want to just mention briefly afterwards. This is probably the last one to do with businesses. That, of course, as we all know, as employers, we pay national insurance, the employer's contribution on any salaries that we pay. Well, from 6th of April, for employees under 21 years old, that's going to be exempt up to a limit, which is an excellent measure. It was announced previously. So, of course, it reduces the cost of employing employees under the age of 21, which is fantastic. A year later, we've then got the same measure coming, or similar measure coming in for apprentices under the age of 25. So again, cutting the cost of employing apprentices. I thought it would have been a really, really neat opportunity for him to have actually brought that measure forward a year, the apprentices one, because we've had National Apprentice Week. It's been a real success story. I mean, we use it. A lot of our clients use the Apprentice Week. It really has been an excellent success story. I just thought that he could have built on that, but by perhaps bringing that measure forward early. I can't recall what the policy costing was. I don't think it was too large a cost.
I mean, it was a very attractive scheme, wasn't it, for the apprentice to be brought into the business. But I think you've got to be of a size that can actually manage that as well. So it is targeting a particular size business, isn't it? This is the whole apprenticeship scheme.
Yeah, the whole apprenticeship, indeed. But small businesses can qualify. I say can qualify. Can use it quite neatly. Again, if I think about one of my clients that employs certainly less than 20 people, they use the apprenticing quite nicely. And but anyway, that was just a.
Now, does that pretty much cover the business side of things?
It pretty much does cover the general business.
Now, what I'm going to ask you to do, you mentioned there were a few things to remember about personal taxation, a few of the changes that have taken place there. What I'm going to ask you to do is just stay behind on the programme after we finish, and we'll put a very special programme up when it comes, just 5-10 minutes, where we look at the personal taxation issues that came out of that particular budget. You'll have an opportunity, if you wish, to go look at that programme separately. So, I mean, we're rapidly approaching. Is that okay with you?
Yeah, that's fine. Yeah.
We're rapidly approaching the end of this particular programme. As always, what we do, we always ask our guests to the real key takeaways. If you're a small business owner, what you should be considering at the end of the programme. 1, 2, 3 minutes. So, are you okay to do that?
Yep, that's
this
fine.
is a bit different. Instead of talking to me about it, you can be looking straight down this camera over here. Normally camera number 1 on the bottom of it, that one there. And if you just say who you are, take a breath, say who you are, the name of the company, and then straight down the lens, that'd be fantastic. I'll just push my laptop down like that, so it's not in your way. Are you happy with this?
Yep, that's fine. I'm going to cheat a bit.
You can cheat as much as you wish. Cheat as much as you wish. But really, what it is the takeaways from the programme. If you're an SME, a small business, maybe an entrepreneur, whatever, that you should be taking away from this particular budget. Camera number 1 is all yours.
Yeah. Excellent. Good afternoon. I'm Matthew Hall, Head of Tax at Wilkins Kennedy. I've been speaking about the budget and the key takeaways from that. It's probably that there was actually little in it for business measures, but do look at investment into plant and equipment. The annual investment allowance, that's going to drop at the end of the year, so you might need to accelerate investment there. For those of you who are either looking at raising finance or looking to invest in business, think about Enterprise Investment Scheme. There's some excellent tax reliefs there, perhaps not used as much as it should be, but there's, it's an excellent regime, and I would certainly advise all businesses to look at that. And the third one is my cheat. It's a point that I hadn't mentioned so far, and it's that the pension regime is changing after the year end, making it easier to access pension schemes. Now the government is expecting to pick up a lot of money through this, so they're obviously expecting a lot of people to start accessing their pension funds, and it is a way of unlocking capital which perhaps could be invested into businesses. So I'd certainly look at that. And the final one really goes back from the earlier conversation, is that do use your accountant and your tax advisor. They really should have a lot of information, a lot of advice that they can give you in terms of reducing overall tax liability and also raising finance. So that's me, Matthew Hall, Head of Tax at Wilkins Kennedy.
It's been absolutely fascinating, Matthew. I've found it a really entertaining hour. I think the danger is that we try to be experts on all things, and I think as a business owner, we need people like you to go to that we can actually talk to and get the information that we need. We need to be steered. I know the decision ultimately is with the business owner at the end of the day, but we do need the right advice. And sometimes when you're maybe listening to a budget announcement, you are asking yourself the question, is this right for me? Should I be considering this? I mean, when you look at the whole area of investment into a company, the different areas that it can come from, the crowdfunding, somebody coming into your business, the investment there, what advantages are in it for the investor, what advantages are there in it for you if you go crowdfunding or you're with an investor. All those kind of things I think are really important, and by talking to experts like Matthew, it gives you that real insight to help your business grow and hopefully help your business be a success. Listen, I hope you enjoyed today's programme. If you're watching on YouTube, please leave a comment under the programme. Give us a thumbs up if you like. More importantly, if you have enjoyed this programme, there's a whole load of them. There's nearly 120 hours worth of content that we've produced up online at the moment. Subscribe to the channel. Now, they've moved the subscribe button, so if you watch previous programmes, you'll find me going, point to the subscribe button. YouTube, God love them, have changed that now. They've moved it from here down to here. So it's just sitting down here now, the subscribe button. So if you click on that, you can subscribe to the channel. That way you'll be notified when a brand new program's coming out. We are live every Monday at midday, and on future programs as well. There we are. You can also sign up to our Twitter account, which is BCL Business TV. Just go there and you can follow, you get all the tweets from us. You can also email us if you want as well to studio@businessconnectionslive.com, and if you want you can also phone us too, for that matter, on 01784 256 777. Now if you'd love a programme like this one, that's a great number to contact us on, or email us if you'd like a programme like this one branded to your organisation, to your business. Now we're already doing this for a number of organisations, one in particular for Networking TV, for NTV, the largest networking group in the UK. They're doing a programme once a month. There are 2 others currently in the pipeline of programmes that will be going out live, and then are able for these different people and organisations to watch on a later date. It's our intention to actually grow Business Connections Live into a business network where there'll be programmes weekly and daily as well, for that matter, where you'll be able to tune in and get advice for your business. People groaning in my ear go, you're joking. No, I'm deadly serious. So it's going to happen. That's going to be happening over the next couple of months. We look forward to you being a regular member of the audience, and we do hope you've enjoyed this particular time in the day when we broadcast the programme. Right, final things you need to do. Subscribe, 1. 2, if you want to get it on iTunes, you can, easy peasy. Just go to the iTunes store, you'll find us there. If you're watching on Roku, great to have you with us. Thank you very much indeed. Also, we are just launching our brand new Vimeo channel as well, for that matter. And I'll just, if I've got the time, not yet, too quick. Yeah, I'm trying to get there as quick as I can. I'll just find it. So there's a brand new Vimeo channel that we've just launched. There it is, that one there. The UK's leading, yes indeed I am. The UK's leading business channel, Business Connections Live, every Monday. The first of the programmes going up there. All the programmes will be on Vimeo. Vimeo is a fantastic platform for hosting your video content. That's the pro version that we've got there, well worth paying for if you want to have your videos up on your own site. Lovely quality, superb analytics. One of the nicest things about that, if you actually put a video up on Vimeo and you don't think it's quite right, you can actually change that particular video without losing the comments, the numbers of viewers, the counts. Great idea, superb. Really a professional network, so that's Vimeo. We're all over the place. That wraps it up, except to tell you that we've got Neil Clough, runner-up from The Apprentice, or The Apprentice finalist as he calls himself. He went on to build a highly successful sales training and recruitment business, and he's also a motivational public speaker. He's on the programme next week. And future guests include Richard Tiedemann. He's going to be talking about how to put together a radio advertising campaign. And then we've got the return of Paul Glynn from Sadler Training West 25, and who will advise how Davids can handle Goliaths in business. Just some of the programs we've got lined up over the next coming weeks. It's been great to have your company. Should we press the button and say goodbye? Looks like it is time to say goodbye. We'll do it all again next Monday at midday. Thank you very much indeed for your company. Matthew, it's been a pleasure.
That was your pleasure. Thanks for having me.
And don't forget, watch out for the special from Matthew on personal taxation. That's coming along shortly too. See you soon. Bye now.